Hi, my name is Paula Rojas, and today I'm going to talk about how finance works, Chapter 3, the financial ecosystem. I'm going to explain the financial ecosystem in two parts, the equity research analysis and the capital markets. Let's talk about the equity research analysis. This is the definition, the media, and the incentives. The equity research analysis work for both buy-side and sell-side firms in the security industry by creating forecasts and making recommendations to investors. The buy side, the sell side. In the buy side, in finance, there are many labels for instrumental investors, money managers, or asset managers, or they might refer to them as the buy side. In the buy side, we have mutual funds, pension funds, foundation and endowment funds, sovereign wealth funds, and hedge funds. Mutual funds manage money on behalf of individual invest those funds in diversified portfolio of stocks. In mutual funds, we have active and passive. Active managers personally decide which stock to hold in the portfolio, and passive funds simply invest in all the stock in a board market index. An example of Colombian mutual fund is Fondo de Inversiones Colectiva, pension funds. These funds are large pools of money that represent the retirement assets of workers from a particular company, union, or government entity. An example of a pension funds in Colombia is Colpensiones. Foundation and endowment funds. Not-for-profit foundations and organizations sometimes retain and invest funds over long periods to create more stability for their operation. An example of a not-for-profit organization is Universidad de La Sabana. Sovereign wealth funds. Countries with excess savings, usually those savings are natural resources, often invest those savings through sovereign wealth funds. An example of a sovereign wealth fund is the Norway Sovereign Wealth Fund. Hedge fund is a private investment company that handles third-party security to cover them for possible risk or increase their value. Let's talk about the sell side. Analysts typically work for investment banks that contribute the sell side. Traders, salespeople, and investment bankers. Traders ensure that there are buyers and sellers for various financial instruments. Salespeople sell financial instruments to investors on the buy side and announce and list ideas. Investment bankers work with companies that either want to raise capital or want to buy or sell operating assets. The media. The equity research analysis use the media to announce their ideas to a broader audience. Incentives. The incentives of the equity research analysis is the ranking system. Is used to evaluate which analysts provide the best advice for a company. In capital markets, we have companies, the problem at the heart of capital markets, and the principal agent problem. Companies. The exchange of information between the company and the analyst about the performance of the forecast is one of the first key insights about capital market. The problem at the heart of capital markets. The inability to credibly share information is called asymmetric information. It's a hard problem because we can't trust what managers tell us. Remember that we have what managers want. The principal agent problem. Asymmetric information, as we talked before, say less and less. Equity compensation. Paying managers with more money so they behave like owners want.